Hey guys, hope you guys had a good day trading today. So today was another day where we had a really nice bear trend starting. You can see though with all these long wicks and whatnot here that it was a very choppy day. We had this really nice sell off at 11:30. And then from there we pretty much just slow rose and we just all day long we're just stuck with very little continuation. And then we had our classic end of day rally just like we've had for pretty much the last 3 or 4 weeks now. So looking over here, one of the biggest things is I'm still watching this huge cup and handle right here. I mentioned that 414 could be the top, which we did hit and reject here. We did also die there again today. So that leaves pretty much 415.3 and then 416.9 as possible levels to watch for the cup and handle to play out. Depending on how high we go, depends on how low the handle can take us. I'm still anticipating at some point this rally is going to fade and we eventually are going to come down and retest at least 405.3. There's just too much left down here. I mean, we have this 399 supply that needs to be taken out. We also have, if you go over to futures, I mean, we have 414, 440, 4053. So there's just too much left below to believe that this rally is going to continue. But right now, we just remain in this rising wedge. We pretty much have two different rising wedges. We have, I'll throw this other one on here. So we have the black, more short-term rising wedge, which gives a resistance tomorrow at 415.6, or sorry, 416.2, and gives support right here at 412.4. However, the red rising resistance is 415.7. So today we actually have a third test of this bull channel support that dates all the way back to beginning of March or middle of March here. So that was when we bounced right off that 410.9 area, 411. So basically from here, we're going to be just looking for the next supply to be put in. We attempted today to put a new supply in, which would have been right here at 412.8. However, with the end of day push, it actually turned it into more of a bullish continuation up. Going to futures, same thing here. We have the rising wedge. We do have the more short-term rising wedge, which would be like right here. But the bigger rising wedge to watch is this blue one right here. So support remains tomorrow is going to be in overnight. It's going to be right here at 41.50. And then 41.93 for the red rising wedge, and then we have 42.10 for the blue rising wedge. Same thing, we still have this really nice cup and handle pattern here. You can see we're coming into key resistance areas from right back here, and this actually is where we stopped tonight, was 41.77. So we could even move this resistance up right here, and you can see this is the 1, 2, third candle to find a resistance with the body right there. So 41.77, definitely a big level. And then really next big upside resistance is 41.93. One thing that we did do is we did have a resistance at 41.73 that we did turn into support today. So that's something to watch. And this is also another bounce off the daily AEMA. So we continue to ride bullishly, but you can see how much this pattern has weakened. I mean, realistically, if you look at all of these days, besides Thursday the 13th, there really was not any days that I would call bullish and strong bullish since probably April 3rd. So everything has just been extremely choppy and really no continuation and just not a lot of strength. So going over to the VIX here, so we actually put a new 52-week low in at 16.9 today. And we also closed a new low at 16.94. So if we go all the way back here, this is January 2022. So this is the lowest close since January 4th, which was 16.91. And this is the lowest level since January 5th, which was 16.58. So now going back here, something interesting to look at here, this is 2021 and early 2022 here, is that we broke below 17.05. And realistically, if we break below 16.58, then our next major support area to keep an eye on is 15.04. And if you can see here, this is a touchback on July of 2021. we have not closed a candle below 15.04 on the VIX since February of 2020. So we are coming into some so strong bounce areas. You can see even back in 2021, which remember that was a bull market in 2021, early and end of 2020. We never broke and closed. We broke below, but never closed below 1504. This 1504 to really, I mean, if you average it out right here, probably 16.5 is a major, major bounce area for the VIX. And even just in 2022 and now 2023, you can see we've had one touch this low in the last over almost 13, 14 months now. So we're at a spot here where the VIX absolutely could bounce, but there is still that potential that we do see just a little bit more of downside. So definitely keep an eye on the downside here, but we could be nearing that temporary top. One other thing I would like to look at here is the dollar. So we started the sell-off on March 8th, and we have broken this sell-off. So this was a 3-point resistance line that we now have broken through. So with the dollar bottoming and pushing back up, that should put some pressure on the indexes and bring that price down. And if you look at March 8th right here, this is March 8th right here. So 1, 2, 3 days later after the dollar topped is when the bottom of the market, or the bottom of the current uptrend, was put in on SPY. So we could in the next couple of days definitely be 1, 2, 3, next 3 days, by maybe by Thursday, see the top be put in here. Other thing to look at here is the 10-year yield. Same thing, we had this massive breakout triangle that actually looked like a pretty convincing bear flag for a big move down, but the 10-year is now bouncing, which much like the dollar, once that bounces, that usually makes the market start selling off. And we broke through this key 3.587 level. So really our next upside level is 3.646. And then we have 3.704 with the 10-year and the dollar in an upside move, and potentially if the VIX can break out of this falling wedge and see a massive recoil up, and the fact that Bitcoin has broken its rising wedge that dates all the way back to March 10th, which was pretty much the beginning or the bottom of the beginning of the rally on SPY. There's a lot of signs saying that we are reaching the top. Now, again, the market can continue to do whatever it wants, but with the potential for the cup and handle, the potential falling wedge, massive breakout on the VIX, with the dollar already breaking out of its bull channel, and then this 10-year breakout of this breakout triangle, you got to favor the downside, but realistically, we just got to kind of wait for the daily 8 EMA to be closed under. And once we do that, or we get a more convincing double top, or maybe like a more massive, kind of like you can see it here on the weekly, massive gravestone reversal doji, it's kind of hard to bet against the upside right now, but it also is very hard to justify going long on calls when we're already at 414 and momentum has severely slowed down. So we were really just kind of in a consolidation pattern, kind of same thing we saw back here in early February, was just that we just slowed down and then we just consolidated, and then finally we had the news and the move we needed to take the market down. So that's kind of what we're waiting for right now, is something that's going to cause not only a sell-off, but a sustained sell-off. So hope you guys had a good day trading today, and I will see you guys tomorrow.